This is the Sunday Business Page with John Delano.
Good morning, I'm John Delano. Welcome to another home edition of the Sunday Business Page. And our very special guest today is Brian Quaranta, who is a financial advisor here in Pittsburgh. I guess we could say that even more elegantly. Quaranta.
There you go.
Brian, thank you for joining us on the show today. I really appreciate it. I wanted to have you on to talk about the debt ceiling that we're hearing all this news about, a deadlock in Congress. I want to know, what does this mean to average people in Pittsburgh? So let me first start and ask you, what exactly is the debt ceiling?
Raising America's credit card balance, the amount of money that we can actually borrow to meet our legal obligations.
And if we fail to raise that amount, what happens to our debts?
Well, you could see a lot of things happen. Number one, and most importantly, is you could see, 50 million seniors potentially have delays in Social Security, which could strap them for cash. You could see the monthly child tax credit installments be delayed. Military personnel could not be paid. So it has real impacts. And more importantly, it has catastrophic consequences on the economy itself, to where we could see a recession greater than the Great Depression.
It's pretty stark. What you're saying is that if America doesn't pay its debts or its obligations, then I assume even the stock market would go crazy. And all our investments, our 401ks, our pensions, could they go up in flames too?
And that's very concerning, because if you look at 85% of the people retiring today, they're not retiring with pensions, they're retiring with 401ks. So most people are relying on their 401k balances to actually get retired. And if those balances are impacted for somebody that might be 5 years from retirement or 2 years from retirement, they may have to delay retirement. Or even those that are in retirement, that are going to rely on those 401k balances to generate income for themselves, could potentially see themselves having to come out of retirement because they won't afford to continue to take the money that they were planning on taking from their investment portfolio.
I can understand the concern about the national debt. It has been going up. It went up quite a bit under President Trump. President Biden is adding to it. What is our debt at the moment?
Last time I checked, it was about $28.5 trillion.
$trillion.
Trillion dollars. That's right. That's with a T.
I mean, that's almost unbelievable. Nobody can kind of wrap their arms around that. And I can see why people might want to stop that spending. But the problem is the ceiling deals with the debt we've already accrued, like obligations to all kinds of folks and companies and businesses. It doesn't really deal with what's going forward. Am I right about that?
Yeah, I mean, it would be utterly unprecedented in American history for the United States government not to meet their legal obligations.
That's put it pretty simply. We've never defaulted on our
Never
debt.
defaulted before, right?
In the end, is there anything that we can do as individuals about this looming possibility?
Well, I think it all comes down to having a plan. No matter what in life we do, we've got to make sure we have a plan. The most important thing that we all can do, as we learned from the past pandemic, is to make sure that we pay ourselves first in the form of an emergency cash reserve. Because those cash reserves, if times like this were to happen as we went through the pandemic, and you have bills to pay and you have a life to lead, it's good to make sure you have at least 3 to 6 months worth of emergency reserves put away. And I've even personally have increased mine to 12 months because of what we recently went through with the pandemic. That's probably the number one most important thing. And for those that are closer to retirement, they should be reevaluating their portfolio strategies to potentially look at a more conservative principal protected strategy, so that they don't lose 30 years worth of accumulation in those portfolios should you have some type of crisis.
Thank you so much for being with us today and sharing your thoughts on this whole debt ceiling issue. I think eyes glaze over, but it's a very important issue that we all need to address. Thank you, sir, for being with us.
Thanks for having me.
And thank you for watching this edition of the Sunday Business Page. Have a great Sunday, everybody.